Hello everyone, my name is Jack and I'm going to do a S&P E-Mini end of day review for Tuesday, September 3rd. And the first bar of the day is a bear doji with prominent tail on the top and the bottom of the bar. Testing a swing low from the prior day, testing a prior day's close, this blue dotted line. It's a swing short for the bears, stop above 1, expecting a test lower. However, the end of the day yesterday, there was a very strong rally with a lot of bull bars and not a lot of selling pressure. So it's not a high probability short yet. Bar 2, consecutive bear bar closing near its low, but prominent tail on the bottom of the bar. This tail is approximately 25% of the bar, so while it is prominent, it's only a 25% pullback of this bear trend on a smaller time frame. It's testing this swing high from the prior day, and I expect it to test the swing lows of the prior days because we are closing below a prior day's close. And it's consecutive bear bars in good context. What's the context? The hourly chart, coming into the day, we're in a trading range. It's a bit of an expanding triangle, but overall it's a trading range. So the context is good for a short. But still low probability. Any move on the open has a 50-50 shot at reversing or getting follow through. The context here does make sense, so it's reasonable, but not high probability yet. Bar 3, a small bull reversal bar with a very prominent tail on the top. In fact, the tail combination between the top and bottom of the bar makes up more than 80% of the bar. This is a trading range. This is bad follow through for the bears. However, we are channeling lower, making lower highs and lower lows. Testing this swing point of the prior day and reversing up. Failing to close above a prior day close, more bearish than bullish. I expect more down, probably more sellers above this bar and sellers below this bar. Bar 4, bear bar closing near its low, failing to close below the prior bar. 4 bar bear micro channel, closing below the prior swing high from the prior day. Now probably testing the low of 52, 47, and 55. Probably sellers above and sellers below. Bar 5, sell climax bar with buying into the close. But again, even though this tail is prominent, it's only 23% of the range of this bar. So if you think about it as a breakout, it's a 23% pullback, which is still a very strong breakout pullback entry. It's closing below these major swing lows from the prior day, and I expect us to continue down and test the prior day's prior day low and the prior day's low here, the swing low. Bar 5, sell to close, stop above, you should be okay. Bar 6, very strong bull inside bar, prominent tail on the top and prominent tail on the bottom, which means it's likely mostly a trading range bar. In fact, 40% of this bar's range is made of tails, which are failed breakouts and reversals. So directional probability, not very good. Also, I did logistic regression on all types of reversal bars, and inside bars are the most unreliable type of reversal bar there is. The thing that influences the reliability of inside bars the most is the position and strength of the close of the bar. This bar has a close that is in the top 82% of the bar, so it's very strong, but it's smaller than the prior bar. There's a prominent tail on the bottom and the top, and we are still inside of a 6 bar bear micro channel, so it's a bad idea to be buying here until we see more buying pressure. The channel down is too tight, so I expect there to be sellers above this bar and sellers below the bar. For that reason, testing the targets below. Bar 7 is a bear bar that opened and sold off immediately with no pullback and closed near its low. Prominent tail on the bottom, but again, this tail is only 14% of this bar's range. It's a breakout and a pullback, and the pullback's only 14%. So this is a very strong trend with a little bit of buying into the close. Testing the swing point, 37 close, 38 low, and reversing up from the low. Probably more sideways to down The problem with the sell-off is it's climactic. This bar is bigger than that body, this body is bigger than that body, and this body is bigger than all the bodies on the chart. Incredibly bearish, no reason to buy yet. I definitely would not be buying the close of this bar, especially with the context. However, we are at the bottom of the trading range, so I do expect us to go sideways. I'd be looking to sell a pullback into this bar's range, probably testing the 6 low, or maybe even higher into the bar. Definitely more bearish than bullish, no reason to buy. 8, small bull reversal bar with a prominent tail on the top of the bar. The tail makes up about 80% of this bar, so this is a trading range. And if you think about it in terms of trend trading range, bar 7, very strong bear trend. Bar 8, trading range. The market is neutral here. We all agreed that the price was too high, and now we agree that the price is okay for the time being. Probably more sideways to up from here. Bar 9 is a bear bar closing on its low, breaking out below the prior day low and all the bars to the left. Probably in a trading range, but this is just too strong to fight. Still a 9-bar bear micro channel with no pullbacks yet. Bar 10 is a bull reversal bar breaking out below 9 and reversing up, closing in the upper portion of the bar. For reversal bars, this looks pretty good. It's doing a fair amount of damage with its body, retracing maybe 40% of the prior bar's body, but prominent tails, so probably sideways from here. I would not get long above this bar. I bet there are going to be sellers above here and probably sellers above here as well. Bar 10 is a weak bull doji breaking out above 10. This is bar 11. Prominent tail on the top and bottom. It's a trading range bar. You notice this yellow triangle above the bar. That's because bar 10 was a setup for a stop entry long, and bar 11 is the entry bar. And because bar 11 reversed down into the close, closing below its midpoint, this stop entry has effectively failed. So this yellow marker tells me that. If this stop entry would have closed above its midpoint, then this triangle would be blue and it would be down here, like these bars here. You notice a dotted line below this bar, and that's the target for the bears for when there is trend resumption. Why here? Because this is the start of the last bull leg. So that is the first target for the bears. So the stop entry failed, and now we're going sideways. It's a bull body, consecutive bull bars, not strong at all. The first thing I think about when I see these bars is minor reversal. I could see the possibility of a huge bull bar just rocketing up and retracing all of this damage that the bears have done. But so far, there's hardly any buying pressure. We're closing below all sorts of important resistance, and there's more resistance down here that we need to test. This looks like this is a higher time frames previous bar low, specifically the weekly chart. So on the weekly chart, it would be this low here, and that's what the target is probably for the bears. We're reversing from yesterday's low. We went up, tested it, reversed down. You could also look at it as a strong breakout below yesterday's low that is now failing. However, the stop entry is failing, so that premise is probably not going to be valid. Bar 12 is a breakout bar closing around its midpoint. Decent follow through for the bulls, but not very good. If you're a bear and you're short, this pullback 10, 11, 12 is only retracing maybe 20 or so % of this entire sell-off. Remember what I said earlier with this bar. Even though it's a prominent tail, the pullback at the bottom of the bar is only 23% of the bar's range. And that's what we have here. This is roughly a 25% pullback of this entire sell-off. This is the midpoint. This is the midpoint of the midpoint, so that's about 25%. Bad follow-through, weak close below yesterday's low, testing higher, testing the open of the prior strong bear bar in the bear micro channel. So probably more sideways to up, but again, minor reversal. Bar 13 is a bear bar that opened at its high and sold off immediately and reversed up, closing just at the prior bull leg's low. Prominent tail on the bottom of the bar, but again, could be breakout pullback with more down to be expected. This bar has a red triangle placed above it because this is a stop entry short for the bears that triggered, and it closed below its midpoint, so theoretically the stop entry is working. We tested support and we caught it, so we may continue to go sideways to up for this reason. The prominent tail indicates buying into the close of the bar, a lack of conviction by the bears, so probably more sideways to up. But I would not be looking to get long here. In fact, I'd be looking to short above this bar and above these highs. Bar 13, small bear doji bar, pulling back into the range of 13 and closing below its midpoint. Inside bars are not very reliable. They are flags on a smaller time frame, so we could be setting up a small flag for the bears. Breakout 15, closing at the prior bar's low and above the bear bar 13 low. Prominent tails on the top and bottom. It's a trading range bar, but what do you notice? We have a spike and now we're channeling lower. 16 bear breakout, closing on its low, closing below the prior week's low and moving away from resistance, creating a gap. The problem with 16 is it's closing on its low, and if you're a bear and you were short anywhere in here, you're probably going to use this opportunity to buy. So bar 17 is a weak doji bar with no body, and we basically went sideways. We broke out a little bit of 16, reversed up, tested the prior week low, and sold off. 18, more profit taken by the bears, most likely. Small bull body breaking out above 17, triggering a stop order, but the yellow marker indicates that this stop order is failing, setting up possibly another short for the bears. Bar 18, first target, the low of 17. Next target, probably a measured move of this leg or some other leg back here. Bar 19, bull surprise, breaking out below 18, triggering a stop order, but reversing up strongly, closing near its high. When this bar first formed and first broke out below this bar, there was a red triangle above it, because that's how the algorithm works. If the bar is closing below its midpoint, the triangle will be red. If the bar is closing above its midpoint, the triangle will be blue, if for the bulls. So probably more sideways to up for the bulls here, trapping the bears 18 low, 19 low. So the next target for the bears is here. Target for the bulls, the prior bear leg high, 12 high. What are the chances that we get there? I'm not too sure. This is pretty strong, however, look where it's stalled at the low point of 10, the breakout gap. So it's a breakout test. 20 is a bull doji closing below the prior bar's low, breaking out above a lot of bars to the left and testing the 12 low, reversing down, finding sellers. If you're a bear and you didn't sell here, and you didn't see a good enough reason to sell here, and then you see this, and then you feel bad, you're missing out, you're going to look to enter on a pullback. Well, this pullback is a decent entry point. It's the low of 10. It's a breakout point. We probably won't go much above it if we do go above it. And then if we do go above it, here's the stop entry trigger for the bears. It's this 12 low, and we tested that and maybe went one tick above it. So this is a very good stop entry opportunity, limit order short opportunity for the bears if you think that this is bearish enough to get more selling. And based on the day so far, probably 70% of the bars or more are all bear bars. 21, bull inside bar with a very prominent tail on the top, probably going lower. 22 broke out above 21 and reversed down, closing at or below the prior bar's low, and closing with a fairly weak close, fairly prominent tail. The bottom tail is about 23% of the bar, and just for fun, the top tail is 47% of the bar's range. It's a good stop entry short, indicated by the red triangle, because the bar is breaking out below the prior bar and closing below its midpoint. Theoretically, it's a good stop entry short. However, if you are taking the stop entry short, it was an outside bar, so your stop doesn't go up here, your stop goes up there. 22, channeling lower. We didn't break out lower, but we made a lower high. 24, second leg up for the bulls, 18 to 21. Good stop entry buy, but failing to close above the prior bar. Very prominent tail. The IBS of this bar is 60. So though there is a blue triangle, this tail is indicating that this stop entry may start to fail. And it's definitely failing now because we have an outside bar that broke out below the low of the prior bar and did not break out above the top of the bar. So bulls probably entered on a stop here, disappointed with this tail, used this opportunity to sell, and did so much that it actually broke out. The market broke out below the prior bar. Bad stop entry for the bears. It did trigger. That's why this yellow marker is here. So we have leg 1 for the bears, pullback. Leg 2 triggers here below 24, but because it reversed up, closing above its midpoint, it's a bad stop entry short. So this is probably failing as well, and we could go higher. But because of the strength of the day by the bears and the weakness by the bulls so far in this minor reversal, I expect us to find sellers above these bars and continue lower. Bar 26 is a breakout bar, testing the high of 24, testing the high of 22, testing the EMA and reversing down, closing well below the prior bar's high. Very disappointing for bulls. If you're a bull and you bought anywhere in here and you get this, you're probably going to get out below this bar, which makes this bar a very good stop entry short. There's a yellow triangle above the bar indicating the stop entry for the bulls is failing. It's closing below its midpoint. Obviously, it's a very weak close. 27, good stop entry short for the bears, closing below resistance, and the bars to the left probably going lower. 28, inside bar with a small bull body. I did logistic regression on all types of reversal bars, and I know that inside bars have the least reliability out of all reversal bars, and the number one influencer of reversal inside bar success is the position of the close. If there is an inside bar with a fairly strong close, that increases the odds that you'll get a measured move up of that bar if you break out in the direction of the inside bar. So because this is a bull bar with a close that is barely above its open, the odds favor a bear breakout. Breaking out below 28, 29 reversed up, creating a small bull reversal bar with a little tail on top. Not strong enough to reverse all of this. Possibly leg 1, pullback leg 2 for the bears. That's failing, setting up a stop entry long for the bulls. However, if that stop entry long does trigger, I expect us to find buyers around the 27 high. The stop entry does trigger above 29, but it turns into an outside down bar closing near its low, bar 30. Good stop entry for the bears, probably more sideways to down. 31, disappointing for the bears, breaking out above 30, closing above its midpoint, so theoretically a good stop entry bar, but the problem is it's entirely overlapping these bars here to the left, and when we broke out above the prior bar, we reversed down. So we found sellers up there, and I expect if we go higher, we'll find sellers again. 32, we found sellers again and reversed down. We're in a very tight trading range. Better to be flat or doing nothing, or short, if anything, with a stop above 26. 33, another reversal, breaking out below the prior bar, closing above its high, setting up a stop entry for the bulls. First target, the high of 32. Second target, the high of 26. 34, broke out, closing below the high of 32, testing the EMA, testing the high of 24, and reversing down. Actually, we didn't quite get there. So not very bullish. The stop entry triggered, and the yellow marker indicates it's failing. 35, bear bar breaking out below the prior bar, closing near its low, testing the EMA as well. First target for the bears, low of 33. 36, breakout, pullback, sell, testing the low of 33. Didn't quite get there. Probably more sideways to down, but not very bearish. Lots of buying pressure in this bar, possibly a double bottom with 33, a higher low with the 17 low, but overall trading range consolidating in a bear channel below the EMA, probably going lower. 37, follow through selling, bear inside bar, This close is good enough that the probability is a breakout to the downside of this bar will result in a measured move down before a measured move up. Breakout 38, pullback, weak doji, lower high. 39, breakout, maybe a measured move of that inside bar by now, but closing at maybe just above support, but channeling down in a 6 or so bear micro channel. Bar 40, adding another bar to the micro channel, but bears are scalping out. Not much conviction here, pretty weak. Any strong buying pressure could easily flip the market from short to long. Sideways, 41, 42, bear bar breaking out below, closing near its low, channeling lower. Now we have 3, 6, 7, 8, 9 bar bear micro channel. 43, spike break. Will we find more buyers above these bars? Probably more sellers, but not much conviction. The bears are scalping out down here, probably using a stop up here. So just hold your stop, just sell, 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 sell. 44, bull breakout, good stop entry. 43 for the bulls, but small and weak, not very exciting. No sense of urgency. Climactic behavior on the follow through bar. The wick is bigger than the prior wick, the body bigger than the prior body, the range bigger than the prior range. It's climax. It's testing resistance, the EMA, the prior week low, and reversing down. I expect to find sellers above this bar. 45 opened and sold off, closing below the bar, prior bar, and closing just above support. 42 low, probably more down. Good stop entry for the bears. 46 bad follow through, strong bull inside bar, reversal bar closing on its high. The problem with any bar that closes on its low or on its high is that it will attract profit taking from the side that is currently long, and it'll attract sellers, because if you know that people are taking profits on bars like these, then you know there's probably going to be opposite side counter trend traders doing the exact opposite, creating even more market pressure to the opposite side. Bar 47, bull breakout, good entry bar, decent setup, double bottom, stop entry long. We made probably at least 1 R of this inside bar, but closing above the EMA, closing above resistance here, 44. So it's a good breakout. We could be flipping to long here, but we need 1 more bar. This is the breakout bar. We need to see the follow-through bar. We have a good setup bar, a good entry bar. Now we need a good follow-through bar. 48 is a bear inside bar. That's not a good follow-through bar. So I imagine we're going to fail these levels and have to go test lower, which means if we fail the EMA, we'll fail this high, we'll fail the weekly low, and we'll fail this prior resistance over here. 49, bulls giving up, bears getting short. Very good stop entry for the bears, probably going lower. Sell a pullback, sell the close, stop up there, pull back. Strong inside bar. We could see a higher entry here. If I was short, I would probably get out above this bar. It never triggered. 51 sold off immediately on its open. The test of the EMA is respected. This is closing at maybe below the prior bar, 51, so probably going lower. 52 inside doji bar, 53 II, expecting downside breakout. 54 closing near its low. 55 breakout pullback, probably 20-25% bottom tail, 25% channeling lower. Now we have some sort of bear channel being formed. So projecting down, this is what we expect. 55 bear inside bar closing near its low, getting close to the bottom of the channel. 57 hesitation II pattern, bear breakout. 58 might reverse. Deep pullback doji. 59. 60 another inside bar for the bears, losing conviction, scalping out. The move here, what's the move here? What do you do? Spike and channel. Sell the high, sell the high, sell the high, sell the high. What do I do here? Sell the high, stop up there. 61, good entry bar for the bulls, stop entry, but bad signal bar. So we're probably going to come back to this high, and that's what we did on 62. Bear inside bar. What do you notice about these two bars? This is if you say that this is a strong bar, what do you say this is? I would argue that this is as strong as that because it's covering most of the range of the prior bar, and we did a lot of damage here. Any bit of bullishness that was done on this bar was undone on this bar. And we're closing below that bar's high, so probably more down. 63 breakout, good stop entry for the bears, targeting at least the 61 low. Testing that low now after a pullback, breaking out below it, testing the bottom of the channel, starting to look to buy, getting climactic here. The bars getting bigger as we channel lower. 66 respecting the channel line, breaking out, bear doji. 67 bad stop entry for the bulls, probably sellers above the bar, sellers above the bar. 68 closing near its low. 69 sellers above the bar again, closing below the midpoint. 70 bear doji inside bar. 71 just sideways market for the last half hour, so sellers above bars. Weak close on 71. 72 finally a bear breakout, closing below the bars to the left but above support. 66 low, probably going lower. 72 late in the day, this is about 3:45, something like that, 3:40, something in there. It's late in the day. Yeah, 3:30. So not much to do at this point but watch. Probably going lower. It's a good stop entry bar. 73 pulled back, follow through, breaking out, closing below everything to the left. Probably going a little bit lower, but look at this. We're right at the bottom of the channel line. And then 74, big bear climax, breakout of the channel line. Bear breakout of the bear channel has about a 25% probability of working and will probably reverse within 5 bars. So let's count it. This is bar 1, 74, bear breakout closing on its low. Bar 2, 75, bear bar breaking out far below the prior bar, but reversing up into the close of the bar, closing around the low of the prior bar. Bar 3, 76, same story, breaking out below the prior bar and reversing up. Bar 4. This is bar 77. It's the 4th bar since the bear breakout of the bear channel. So that means that bar 5 should reverse the market. This is a good stop entry bar despite it being a bull doji because it has a close above the midpoint. If you're a bear and you sold anywhere in here and you're still holding short, if price goes above this high, you run the risk of having a double bottom or higher low, major trend reversal, a head and shoulders bottom on a smaller time frame, and we could have a very strong bull bar for the next bar. 78, very strong bull bar for the next bar, closing near its high, testing the breakout point. 66 low, EMA just above, possibly a little bit higher, follow through and sideways to down for the end of the day. So now tomorrow is September 4th, which is actually today. This is the first bar of the day today. A bear breakout on the open that briefly sold off and reversed up strongly, closing on its high. But what is the context here? This was a bear channel with a bear breakout that got a minor reversal correction up to the top of the channel. And now we have a bear breakout that's testing the low of the trading range. Why did I say that this is a trading range and no longer a channel? Because we have a higher low, we're reversing up from the bottom, and we have what appears to be a minor reversal down, a minor reversal up, and now another minor reversal down. You could argue we still are in a bear channel, but if you just look at these few bars, excuse me, shit. Let's just look at shit. If you just look at these bars, pretend it's in a little box. All right, where's the box start and end? Probably somewhere around here. That's the trading range. So first bar of the day, strong bull bar, closing on its high, but in the middle of the range. Bar 2 triggered the stop entry long above bar 1 and failed because it closed below its midpoint. So it's bad follow through for the bulls. However, if these two bars were put into one bar, this would be a strong bull bar closing near its high with maybe a 25 or 30% tail. So more bullish than bearish between these two bars. But the context is bad. We're below the EMA, we're inside of a bear channel, and we're in a trading range near the middle, so probably better to do nothing. Bar 3, weak bull breakout closing below the prior bar. Leg 2 for the bulls and testing the highs of the trading range. Possibly going higher, but probably going to find sellers above these bars because that was the trend yesterday all day. Bar 4, strong bull reversal inside bar, probably going higher. Probably will test these highs and break out above, and test this high and break out above. It's a strong closed bar, so the odds do favor a measured move up of this bar. Bar 5 is follow through buying for the bulls. There was a brief sell-off testing the midpoint of the prior bar, closing above its high and above the EMA. 5 bar bull micro channel, but approaching resistance. The top of the sell-off from the end of the day yesterday, 79, and the measured move target, the high of 71. Bar 6, weak bull doji bar, another reversal bar. So what's happening with these reversal bars is a breakout, a pullback, a breakout, a pullback, breakout, pullback. These are all legs on smaller time frames. And look at what's happening to the bars. This bar is big. This bar is pretty big. This bar is smaller, smaller, smaller. This body is big. This is smaller, smaller. We're getting smaller bodies, smaller bars. We're losing the energy of the bulls. We're losing the momentum, the inertia of the bulls. So I do expect us to start to go sideways to down before too long. And now bar 7 opened on its high, broke out very far below all the bars to the left, tested the bottom of the range, bar 1, and reversed up, closing above its midpoint. It's a good stop entry for the bears until it started reversing and closing above its midpoint. So it's a bad stop entry bar for the bears. Probably more down is likely than more up. Why? Because this single bar did enough damage to completely reverse the past half hour of bullishness by the bulls. All of it was undone, 100% of it. We maybe didn't get exactly to the low of bar 1, but I imagine we will, unless we see more strength. Bar 8 is a bull reversal bar, closing near its high with a prominent tail, testing the high of 79 and pulling back. But it's a strong enough bar, and there's enough buying pressure in the day to make sense to look for some sort of bull trend today, or at least a trading range. If it is a trading range, this could be the high, this could be the low, or any of these prior highs could be the high. Bar 9 is the current bar, I think. Yes, it is the current bar. Bar 9 so far, follow through buying for bar 8. It's a stop entry long for the bulls, currently fighting it out, but failing to even break above the prior bar. You know, this pattern here looks familiar to me, and it looks a lot like what happened the other day on the open. There were a few bull legs, a bull reversal bar with smaller bars, a bull reversal bar with smaller bars, another weaker bull reversal bar, and then bigger bars, and then a big reversal bar, and then a strong reversal down. And that's not exactly what's happening right now, but it could end up looking that way if we continue to have this bearish activity here at the top of the range. So that's my review. This is my first E-Mini review ever, and I just did whatever I felt was natural. I think I'm at a stage in my trading where the best thing that I can do for myself is to just talk about the market and what it's doing and how I see it, because I have a lot of information that I understand and I've learned, and now I just need to practice integrating that information into my being, my perspective. And it's hard to do that unless you look at a lot of charts and talk about what's happening with the bulls and with the bears, and look for support and resistance, and look for strong breakouts and strong reversals, and understand why an inside bar isn't very reliable, or why an outside bar is the most reliable reversal bar. In my logistic regression study that I did on reversal bars, outside bars are by far, not by far, but by 1 or 2% more reliable than even very strong bull reversal bars. Let's find a strong bull reversal bar. Like here, this hammer bar, some people might call it. Outside bars are even more reliable than this, given the right context. For example, here, this stop entry triggered and failed. You're probably going to get at least a small second leg down. So, anyways, that's kind of where I'm at, what I'm working on, and what I'm going to do from now on. I'm going to try to have an E-Mini update every day if I can, and hopefully it not take too much time, and maybe I'll continue this style of E-Mini review, and I'll make them in the morning before the market opens. That way my practice is completed before the live market action, and I have a better chance at implementing and applying the knowledge when I've practiced it just immediately before the live market. For example, now we did have this bull reversal bar 8. It's a good stop entry for the bulls, but in reality, this is not what you want to see when you have a stop entry trigger. And this is certainly not what you want to see when a stop entry triggers. So for that reason, I imagine there would be more sellers above these highs, definitely at this high here. So that's something to watch. Also, about all these indicators, these are indicators that I've learned how to write, and I created all of these myself with the help of ChatGPT, a company called Delphic Trading, and a company called Emerald Trading. They have some easy language experts that I consulted with to just make sure I understand the easy language functions and concepts well enough that I'm using them properly, because if you have an idea about something on the chart, then you can program it if you have clarity about what that concept or idea is. So for me to be able to program stop entries, I have to understand when does a leg begin and when does a leg end. Otherwise, I wouldn't be able to write the program for the stop entries, and I also wouldn't be able to plot the support and resistance from the prior leg highs and lows. It's very valuable to learn how to do that, because now I don't have to look for breakout gaps. I can see the gap right here. I can see this gap here or this gap here, and then when we get this bar 79 high testing this gap, I know to look for a reversal down. So very valuable experience there, and that's all I have to say. So have a good day.